Let's get back to the market rally that we saw today. And I think the question that we all have regarding the size and the scope of the rally is, do you believe the bounce? Do you think, Guy, anything has changed between today and yesterday?
The only thing that's changed is obviously the price. But go back to yesterday's show. Listen to what Karen said. Go back and put your Betamax on and listen to the comments she made. I mean, she talked about this day exactly at the top of the show, and here we are. Not only in the equity market, but then we talked about energy at the middle of the show and the potential for it to sell off in a meaningful way on any remote good news, and that's exactly what happened. To answer your question, no, I don't believe it. Nothing's changed. I think in order to be bullish here, overall bullish, you have to believe that somehow peace is going to break out. The Fed is going to thread this needle, which is not going to happen, and earnings are going to hold up into what seems to be a slowing economy. So I think the overriding theme is you sell rallies now as opposed to where we were pre-Thanksgiving of 2021, where you were buying sell-offs.
Let's get an answer to that question. Let's see if anything is different in terms of the Russia-Ukraine conflict. Kayla Tausche's in D.C. with the very latest. Kayla, is anything different? Because the market's various asset classes are telling us that the situation is improving.
Well, that's certainly what the market has been led to believe. The market's clung to any positive headline as a buying opportunity for months now. Remember, 3 weeks ago, rising sharply on a belief that a promise by Russia's top diplomat to meet with the U.S. meant an invasion was out of the cards. We saw how that played out. And now a fourth round of ceasefire talks inspiring optimism despite little substance changing. Tomorrow in the Mediterranean city of Antalya, Turkey, Russia's Foreign Minister Sergei Lavrov leaving the country for the first time since the invasion began to meet with his Ukrainian counterpart. President Zelensky told a German newspaper today he wanted to end the war and was ready to compromise. But that's long been his position. Earlier this week, he told ABC News NATO would not be pushing for Ukraine's membership and that Zelensky was open to dialogue on the separatist regions, saying we can discuss and find a compromise on how those territories will live on. But Zelensky has also said Ukraine is not ready to capitulate, and any deal would require a country's leader to broker it. Vladimir Putin so far has been unwilling to accept Zelensky's invitation, and a spokesperson for the National Security Council telling me today the U.S. is broadly supportive of diplomacy. However, it remains clear-eyed about Russia's intentions given what's happening on the ground. Inside Ukraine, the International Atomic Energy Agency says it's no longer getting regular data transmissions from the two nuclear sites Russia has overtaken in recent weeks. And now U.S. officials raising new concerns that Russia may use chemical or biological weapons and accuse Ukraine of falsely doing the same thing. Melissa?
Kayla, thank you. Kayla Tausche. So it doesn't seem to have much substance in terms of what has transpired today, Karen. The chemical and biological weapons, that's terrifying in my view. But what's your interpretation of the bounce? Guy said, you sell these rallies.
Yeah, I agree with Guy on that. Nothing much happened. If you stand back and squint and look at the SPY, I mean, it's a blip. It's just, it seemed like we were exhausted. Sellers were kind of, I don't know, very bearish. We saw the VIX spike, not quite as high as I thought it would. So it's not crazy that we have a bounce like this. But I don't agree with Guy in the, sell every rally, because I got to be invested in the market. And I know that I'm never going to pick the bottom or the top. I'm never going to be able to do that sell and buy back tax efficiently. So I got to stay in it. And so I try to, just buy companies where I think the long-term value is there and that balance sheets are in good shape. That's where you really run into trouble.
And I think it's a matter of, to your point, a matter of staying long 70% of your portfolio and trading around it with 30% or even in individual names. But how do you buy a bottom with chemical warfare, bombs going off? That's an impossible bottom for me to buy.
Was that ever off the table, though?
What?
Chemical weapons.
I think this whole thing is so surreal.
Now. Was it ever off?
Right.
I don't know.
Has it entered the conversation?
He didn't say he was ever going to move into Ukraine.
Yeah,
so all of this was off.
As well.
Yeah. Bono, and you're making the point today that everything rallied today, which seemed suspicious to you.
Yeah, it just seems like blind buying or exhausted sellers and people trying to be opportunistic here, which I don't really think that's a very thoughtful playbook given the geopolitical risk. They make no bones about it. This is a binary event. I couldn't tell you, and I don't think anyone, being honest, could claim that they can tell you how to play a possible war outcome or a conflict like this outcome. So you see oil kind of coming off. People tend to buy everything. Last time I checked, is oil at 110 bucks? Is that a positive? I still think that's pain for the consumer. I mean, that's the driving force, behind our economy. We saw flat, wage growth in Thursday or Friday's reading. I still, we still have, I think, the 2s, 10s around 26, 27 basis points. I don't know. It seems like all of that was ignored. Oil came down 15, 16%. We have some maybe window dressing news out of Ukraine, Russia region, and people are back risk on. Makes absolutely no sense. Technically, we're still very much in a downtrend, and I think this is a bear market bounce.
Yeah. So Guy, what do you think about tomorrow? How do you think about tomorrow then?
Think about it in the lens of the CPI. What does that mean? Does it mean anything at this point, right? I mean, I think prior to, 2 or 3 weeks ago, we would have been looking for the CPI print is in terms of the direction it will give us for the market. I don't think it necessarily means that much now. It's really coming down to the headlines. But make no mistake, I mean, real inflation in this country, I'll say this, I'm sure people will come at me, it ain't the 7.5% that you read about. It's probably closer, given everything that's going on, to 14%, which means real yields are about as negative as they've been, which means the Fed's probably literally 2.5, 3 years behind the curve. So they have to move. To me, the market changed late November when they changed course. When they changed course, everything changed. And I think that's what you have to sort of keep in the back of your mind. The Fed is no longer backstopping, is no longer underwriting this market.